Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
If you never want to miss a Bloomberg Businessweek story, you can become a subscriber today. By doing so, you'll tap into some deep reporting and analysis from reporters around the globe. Check out how to get unlimited access to Bloomberg Businessweek. You just head to bloomberg.com/subscribe now. And on the cover, if you check out the new magazine, there it is for those who are watching, is a story by Bloomberg News auto reporter Gabby Coppola.
It's all about Chinese EV offensive, and that offensive is BYD. The story is today's Bloomberg Big Take, meaning our editorial team has deemed it a must-read. Gabby, good to have you with us this afternoon. Congratulations on the cover story. BYD, Build Your Dreams, is what it stands for. Warren Buffett's Berkshire Hathaway has invested in it. Tell us a little bit about it, how they figured it out, because it's the brainchild of a battery scientist, and it goes back decades.
Yeah, that's right. BYD was founded in 1995 by a Chinese battery scientist named Wan Chuanfu. And he was basically a government researcher who saw that, the Chinese economy was opening up, and he decided to move to Shenzhen in the south of China, which is today kind of one of the, like a Silicon Valley of China. And he started out making batteries for mobile phones. But his dream was to electrify the auto industry. He always thought that you could make, battery-powered vehicles. And it took a really long time, from 1995 up until about 2020, for him to make that a reality. But the story is really about how he did that. And, BYD, because they are kind of the poster child for China's EV offensive around the world, I mean, they're not the only one by any means. There's lots of Chinese EV companies that are now trying to export around the world. We see a lot in Europe, but also in Southeast Asia. But BYD is kind of the strongest and the biggest, and they're the biggest EV seller in China. And I think because we're in this moment of trade war and talking about tariffs and tension with China, there's a tendency by people in the West to kind of think that, oh, this is all because of Chinese subsidies. And I'm not at all saying that there aren't Chinese subsidies involved. I mean, the Chinese economy is not a free market economy. There's a lot of protectionism, and the scale of subsidies that they use is much higher than what other, free market democratic countries do. But if there were just subsidies, there would be 20 BYDs, and there's really just one. And that is due to the innovation and the sort of long-term vision of Wan Chuanfu and the other key people in the company.
Well, Gabby, get to it, because it does feel like the nut that they figured out how to crack, the holy grail, if you will, is to build an affordable EV for the masses, which we keep getting promises from the likes of Elon Musk and others, and yet it hasn't happened. BYD, though, figured it out. How is that? Is it just getting the cost of batteries down? What was it?
It's not just one thing. I think it's a confluence of things. But, one thing I learned in researching this story, Carol, is that, we look at the U.S. now and we say, oh, EVs aren't taking off. Look at this. Sales are down. China went through that, too, for like 10 years. China also was engineering incentives. But the thing is, BYD never stopped. I mean, they had a vision to do this, and they kept doing it when it was not popular, when they weren't selling. One thing that's really key is they also sell hybrids. So they're not like Tesla, where if EV demand drops, that's all they got. If you got range anxiety, BYD's got a plug-in hybrid for you. Mm-hmm. But I think the key to what they've achieved is a lot of it has to do with vertical integration. UBS did a report that their vehicles are 25% cheaper to make than basically the rest of the auto industry. And a lot of that is because they make so many things themselves in-house. This is not just a battery. This is not just a car company. They make semiconductor chips. They make solar panels. They make components for consumer electronics for companies like Apple. I mean, they're manufacturing titan, really, in China. But the other part of it is they had a battery breakthrough. Like I said, Wan Chuanfu is a battery scientist. And I think China gives a lot of subsidies for research and investment, R&D and investment. That's a big part of their economy. And so, I mean, I did visit their headquarters in Shenzhen, and I felt like I was at an academic campus or like a national lab, because there was just the museum of all the things they've invented and researched there's a lot there.
What's there? Give us an idea of what's there apart from vehicles that we've seen pictures of, because we know we're not driving these things here in the U.S. We'll get to that in just a minute.
Right. Well, and keep in mind, like, they're not letting an American journalist in to see behind, the wall and see all their secrets. But I mean, one thing that Wan Chuanfu is very proud of is they always do this nail test where you go in the museum lobby area and there's this glass wall and there's a lithium ion battery with nickel. And then there's the BYD battery, which uses LFP or lithium iron phosphate. That's kind of a key part of their success, is they decided early on to work with this battery chemistry, LFP, which is more stable and less fire prone than the nickel-based batteries we've seen the Koreans and everybody in the West using. So when you go into this museum, they have this like robot arm that comes down and sticks a nail right through the battery. And on the nickel side, you see the thing explode. And on the BYD LFP battery, nothing happens. So that's like probably one of Wan Chuanfu's greatest achievements, is he was saying, look, I made this battery that, can actually be used for long range vehicles, but it can, and look, they brand it as the safe thing. No battery is 100%, zero fire risk. And I think if you were to Google, you'd find that's true for BYD too. But, that is a key part. But, suspension systems, research on materials, polymers, so many things. I mean, engineering, all these things. But another thing I should mention in my story, a scoop that we uncovered, myself and our star Apple reporter Mark Gurman, is that actually BYD and Apple worked together for a battery system for the Apple car when that project was still going. And our reporting showed that work that Apple and BYD did together did influence and impact somewhat of BYD's own blade development, because at one point both companies had access to this very similar technology. Apple decided to shelve it because who wants to get into the car business these days, I guess, and BYD ran with it, And to be clear, BYD developed the blade battery by themselves. There's no Apple IP in that blade battery, but the two companies worked together. You had some of the best and brightest minds in this field working together, and BYD is the one that commercialized it, and now they're the biggest car maker in China, thanks in part to that battery breakthrough.
Hey, so Carol, you getting one?
Well, listen, my husband and I have been looking at EVs for a while, and they're just crazy expensive, and it's just hard to get. And I kind of want to do the right thing for the environment.
Well, you're not going to get a BYD.
I'm not going to get a BYD. Listen, we only have about 45 seconds left here, Gabby, and I highly recommend everybody check out the magazine, because there's so much detail in this, and it's a company that we talk about so much. 30, 40 seconds, though, takeaway before we have to say goodbye.
If the West, if U.S. and European companies want to compete with China, they have to be honest about what they're up against. And it's not just subsidies. It's a very competitive company. We're down a few points, quite a few points in the fourth quarter, but the game's not over. There's still a chance, but companies need to get honest with themselves about the kind of cultural change and technological change that needs to happen for them to compete with BYD.
I wonder how many automakers are somehow, surreptitiously getting a BYD car and pulling it apart and understanding everything that's in it and trying to figure out what they need to do, right? Gabby?
Business and do it in teardowns. Yes, that's happening.
Great reporting. The Apple scoop, too, as well. Unbelievable. Bloomberg News auto reporter Gabby Coppola. She's, of course, got the cover story of Bloomberg Businessweek.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Businessweek. Carol Massar along with Tim Stenovec on this Thursday. Well, just a reminder, new issue of Bloomberg Businessweek. It's out on newsstands now. Never miss a Bloomberg Businessweek story. To do that, you can subscribe to gain unlimited access to deep reporting analysis from our reporters that are at Bloomberg News bureaus around the globe.
I mean, Gabby Coppola, she just said she went to China to do this cover story.
It's on pretty BYD. Amazing, right?
Yeah, they do big business, they do small business, they do everything in between.
They're on the ground. You hear and find out so much. For more information, head to Bloomberg.com/subscribe now. One of the things that Businessweek talks a lot about, small business, Tim.
Yeah, our latest read on small business found that optimism of the group was little changed in September. This as firms dialed back capital spending plans, illustrating historically high uncertainty ahead of that U.S. presidential election, with which, Carol, count it, 19 days away.
Tick, 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 tick. Our next guest has a great read on small business. For that, we head to Chicago. And Aparna Khurjekar, Chief Revenue Officer for Business Markets and SaaS, Software as a Service, over at Verizon. Aparna, good to have you here with us. First of all, You did do a survey of small and mid-sized businesses, SMBs. Who and where and what did you want to find out?
Yeah, absolutely. So small businesses, as you were calling out earlier, are big businesses in Verizon, in the US, and Verizon wants to make sure that we're spending time getting a pulse on what they are looking for and how they're feeling, so we can be serving them and we can make sure that they're thriving in the local communities they work. So what we do is every year, this is the 5th time, we bring over 600 small, medium businesses, all the way from sole proprietors to about 500, every vertical, every industry, and just learn from them what they're looking for. So we just completed one a week ago.
So net, optimism,
net,
pessimism.
Yes. Okay. So there's good news and there's the kind of the opportunity. So the opportunity really is, there is anxiety, definitely. You called it out earlier too. And the anxiety is really about the US economy, the local economy, and inflation. Definitely quite some anxiety, especially with elections coming around the corner, 19 days, they said. It just is a little exacerbated. But it's not any worse than last year. What we are seeing, though, is where there is even more anxiety is the impact all of this is having on them. The fact that many of them are concerned that they may not have the livelihoods, or that they may not have the wherewithal, the financial wherewithal to go support their small and medium businesses. The good news, though, is there is optimism. Over a whopping 50% of them are thinking they are going to be in a much better place in this quarter, and definitely 59% of them definitely feel like they're going to be in an even better place in a year from there. So that's good news.
Why is that? Why do you think that is?
I think the story there is, even though a lot of these businesses have been pushed into a little bit of the concerns around cost, increasing inflation and such, they have been investing the right way. And where they've been investing is really in innovating and doing things right, and using a lot of the technology, AI being a big one for them. For example, we were a little surprised, but over 4 out of 10 small, medium businesses that we surveyed now have a storefront on social media. And that number was practically non-existent a few years ago. It was just a cool innovation. It's in vogue now, everyone's adopting. And because of that, because of how they're leveraging technology, they're in a much better place, not just to serve their customers, but also bring in the right kinds of operational efficiencies and really focus on the stuff that they do best, which is do the production of whatever it is that they are delivering to the customers.
Hey, speaking of leveraging technology, Aparna, give us an idea of AI and to what extent these small businesses are actually successfully leveraging AI right now.
Yeah, that's a great story, honestly, because last year we saw about 14% of folks aware of AI, starting to dabble in AI. This year, that number was 39%. So that's a huge story. And what they're doing with AI, that it's not just, hey, we are using AI to go do marketing. It's we do marketing with it. We are using it for our financial accounting. We're also using it for social media in big ways, but also for everything we're doing with our inventory management and supply chain. So you name it, they're starting to use AI in ways where they're doing things better and differently, augmenting their staffs. Talent, as you know, acquisition for them is always top of mind, but it's helping. AI is helping them bring in the right level of that augmentation, or in many cases, replacement as well. So we like that. What we are seeing, and many of them are saying, I think the number was somewhere close to 30%, are saying, look, we are in a much better place now. We can deal with a lot of the influx that's coming through all the pressures, socioeconomic pressures, because of AI. And that's a great story.
All right, going to leave it there. Hey, Aparna, thank you so much for finding some time for us on this Thursday. Aparna Khurjekar, Chief Revenue Officer for Business Markets and SaaS over at Verizon.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We also have in the studio the CEO of the third largest plane maker of commercial airplanes after Boeing and Airbus. Embraer has 18,000 employees around the world. They've delivered more than 8,000 airplanes over the last 50 years. Here's some perspective. A plane made by Embraer takes off every 10 seconds, and each year its planes carry about 145 million passengers. Francisco Gomes Neto is president and CEO of Embraer. He joins us here in the Bloomberg Interactive Brokers studio. Welcome.
Thank you very much. Thanks for the opportunity. Very excited to be here.
Yeah, we're excited to have you. We've got a good chunk of time with you, so we're going to try to get to a lot. You've got a great view on the global economy. You sell all over the world. You sell to governments. You sell to businesses. You sell to airline customers, of course. How is the economy right now?
Well, we have a positive view in general for the economy and more focus on the aviation. And we see that, the business will grow in the next years. So for the different types of aircraft we make.
Where's that growth going to come from? And which divisions you think are really the strongest opportunities?
Well, business jet is growing since the pandemic. We believe it will continue growing in a different path. Commercial jets, more and more people are flying. And also military aircraft, because of the investments we have seen in the defense of the different countries.
But of those segments, where do you see the biggest growth? Commercial aviation is your biggest sector right now in terms of revenue. Where do you see the biggest growth?
It is. We have two models. We have one E175 E1s, the regional jet. We have more than 800 flying in the US. And now the new family E2, that we have two models, E190, E195, that are very efficient aircraft and perfect to fit, to complement the big narrow bodies.
Let's talk about narrow bodies because we have a lot of our colleagues who want to know more about this. So it's been well documented that we have Boeing and the crisis that they've been in with the strikes. Airbus has a version of a 730 MAX style plane, the A320 in its variants, and that's sold out through the end of the decade. So begs the question, are you planning a narrow body jet of that size to take on these guys?
Well, we have a very young portfolio of products. Our E2 family was launched in 2018. It's a very new aircraft. So now our focus is really to sell more and more E2s and fill our production slots in the next years.
The thing is, though, is that version of the E195, the E2, accommodates about 146 passengers at the most.
Correct.
The 737 MAX can accommodate more than 200. The A320 close to 200. So you're not really a competitor when it comes to those larger narrow bodies from Airbus and Boeing.
That's why we believe the A2 is a perfect fit for example, US airlines as well, to fill the gap between the regional jets and the big narrow bodies.
Can you tell us example, what kind of flights those are, to give people a perspective of what kind of route that would serve the best?
Routes from 40 minutes up to 4 or 5 hours. Our E2s can fly over the US coast to coast.
But has your view on this changed in recent months, given Boeing's struggles? Boeing over the last few months has had an incredibly tumultuous period of time with a new CEO, strikes. Isn't this the opportunity to go after some of their share?
Well, we have aircraft available. We have a great product, and we have the aircraft available. So we believe we are a good opportunity for the airlines to add more capacity quickly, right?
Let's say you did want to take them on in the narrow body market. How long would it take you to, from the ground up, develop a competitor to the 737 or the A320 or what China's doing with the COMAC?
Yeah, we don't have any plans yet to go bigger. But to develop a new aircraft, take as base our E2, it takes 7 to 10 years to develop a new aircraft.
So what's the competition then for the E2 space right now? Or is that a market that you're really comfortable in? You feel like that's a share that you're happy with?
Yeah, our direct competition is the Airbus A220.
And you feel like you're in a good spot compared to Airbus and that, and this is where you guys want to be, or there's even more share to be gained?
No, we believe that the market is big enough for both, and we have a great product.
But do you have a window in the bathroom like the A220 does? Have you seen that? Have you been on one of those?
We believe we have many other advantages.
Okay.
Tell us about them.
Not just the window in the bathroom, right? On the
yes.
A220. That is unique. I did fly one of those and get to check that out.
You take that. You should look at the view.
Yeah, it's kind of weird to have an window in the bathroom.
I feel like that'd be a little unsettling.
It's fine.
Well,
nobody's looking in. Let's just say that.
We have in our business jet a window in the bathroom.
Okay, there we go. Haven't been on the business jets. I want to talk a little bit about supply chain challenges because they've certainly constrained production for Boeing and for Airbus and for you as well. What are the biggest bottlenecks when it comes to the supply chain at the moment for you?
Well, in general, supply chain is improving from year after year. But yeah, you are right. We have a few bottlenecks like engines, valves, interiors, just to give some examples.
Is it better now than 6 months ago, than a year ago?
I think the problem is that we are asking them more and more parts. We are growing production, and this brings more difficulties to them. I think they are delivering more, but even not as we need and on time we need.
How about supply of labor? You feel like you're sufficient on that front, or are there still, areas for improvement, bottlenecks with respect to labor?
I think labor is mature labor is one of the issues they have, but they are working on to resolve that issue.
And what kind of workers are we talking about? Workers who are related to the supply chain or pilots? I
think more blue-collar workers. Yeah.
Okay. And where do you think those people are going to come from? Are those jobs, where are they going to appear?
Well, I think they are hiring more people because the production is ramping up, but you need to develop people, you need to train people. I think this is one of the challenges they have.
Yeah, a few years ago, Jamie Dimon talking about training this type of worker and referencing the school right across from LaGuardia Airport in one of his annual letters, talking about the need for that type of education happening here in the U.S. What about when it comes to engines from GE and Pratt? Airbus had to pare its annual jet delivery targets due to shortages of those engines. How are you managing your way through that?
Well, we use both. And this is one of the critical issues we have because, again, we are growing production. And our competitors are doing the same, right? But I think we're managing well with them. We are getting the engines, more or less the engine we need, but not in the time we need. They are delivering with a certain delay, and then we have been working very closely with them to improve the situation.
What are your strongest markets regionally right now, and how do you see that developing?
The regional market, you mean? Mm-hmm. I think it's coming back, especially with more pilots available.
In which region, sorry?
In the U.S.
In the U.S., okay.
Yes. So a good example is the new order we got from American Airlines in March this year for 90 aircraft. So it was a good sign that the market is picking up.
It's been well documented that there was this breakup between Embraer and Boeing after Boeing decided to scrap that joint venture back in 2020 because of the COVID pandemic. There was a settlement, many millions of dollars. Is there a sense of relief, though, that didn't go through in your shoes, given that Boeing has had so many issues of late?
Well, we are relieved that this issue is done, right? I mean, now we can focus on growing our business, on improving our efficiency. That's why we're happy that this is behind us.
Is it 100% behind you? Is there a scenario in the future where you might consider partnering with Boeing again, given that there's new leadership at the company?
Well, we Embraer, we are always open to evaluate a new partnership that can help us to open new markets for our products or even to develop a new product. But we don't have any concrete plans for that at this point of time.
But you're open to it?
Yeah, we are always open.
What kind of situation do you think you could envision in that would make sense for?
Well, I mean, as I said, to open new markets that can add value for both companies.
We've talked a lot about labor shortage. Molly, this is something that you have
all
covered
over it.
A lot.
Yeah.
Pilot shortage, though, affecting your business because it affects the airlines. The airlines have to pay more for talent. They have trouble finding these pilots right now. How do you think about that in your business?
I think it did affect us, and then just the years after the pandemic, especially in the regional market, because the pilots from the regional market went to the main lines. But the situation has improved, and I gave you an example of this new order of American Airlines that is a positive sign of that.
You know, there's some discussion about airplanes being developed and only having one pilot, and in some cases, no co-pilot. You know, you went from years ago having the engineer and the pilot and the co-pilot, and now there are only two pilots. There's only the pilot and the co-pilot. Do you see during our lifetimes, foresee a time when there might be only one pilot in the cockpit?
What I see now is the trend to simplify the work for the pilots and make the aircraft even more safer. That's what I see right now. I think single pilot is a long-term reality.
What about no pilot?
Can barely even get to driverless cars, let alone planes.
Exactly.
But maybe they're controlled somewhere else.
Well, I mean, the technology is being developed to get there, but it's not only technology, right? This is a big challenge for all the industry, for the passengers.
But I mean, how much time is the pilot spending actually flying the plane outside of takeoff and landing right now?
Well, I don't know exactly, but the fact that you have two pilots bring you more safety sensation for the passengers, right?
I think the challenge would be for passengers.
I was just going to say, I think like the comfort to get on a plane
on?
with no one sitting there. I don't see myself being a customer of that.
Say hello to the robots.
I don't think I could do it.
Okay.
But I mean, well, maybe here's a different way to think about automation. How are you thinking about that for your manufacturing operations, and what are the challenges associated with that?
Oh, in terms of automation, we do a lot in our company, but we combine, we call lean manufacturing with automation, right? We want to remove the wastes from the process, at the same time, automatize the process. We are improving a lot our efficiency and productivity with that.
Can you give us some examples, like what's being automated right now that maybe wasn't like a year ago?
For example, the wings. We use the robots to help us with the final assembly of the wings, because we have thousands of screws that we can put in the wings, and the robots do that, in the same way all the time.
Instead of like me with a screwdriver.
Exactly.
I imagine they're much faster.
Exactly.
Yes.
I keep going back to Boeing because there are only so many examples of large aerospace companies out there. And what we're seeing at Boeing right now is sort of a attempt to consolidate some of the businesses that it's spun off over the last few decades. Spirit Aerosystems, for example, it's in the process of being bought by Boeing and coming back to Boeing. Do you see potential for more consolidation when it comes to your supply chain, the aerospace supply chain? Would you consider making any acquisitions to vertically integrate?
Well, we are much smaller than Boeing, right? Our company. But we have 4 different businesses: commercial, private, defense and security, and service and support. And we do very well with them. We have one engineering department that supports all the business. It's a very good synergy, transferring technology from one business to another. So for us, in case of Embraer, it works very well.
Just last one for you here. How would you describe your outlook for business jet demand next year? I know you said that that's one of the growth areas that you're looking for.
We are doing very well. We have a great portfolio of product. We are sold out until almost the end of 2026. So
that's a pretty good pipeline.
It's a very good pipeline. We are even investing to increase the production of private jets at Embraer.
What's your favorite plane that you make?
The Praetor 600.
Why?
Well, it can fly from São Paulo to Miami, New York, London, Dubai, non-stop, very comfortable, anti-turbulence device. It's beautiful.
This is the type of plane that is a business jet, right?
Yes.
Yes, this is not a plane that I'm going to get on if I
one day, Tim.
go to
With
an
a window
airport.
in the bathroom.
It does have a window in the
That's
bathroom.
what we're looking for.
There it is. Francisco Gomes Neto, President and CEO of Embraer, joining us here in the Bloomberg Interactive Brokers studio.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Private equity, tariffs, and joint bank accounts with your spouse. These are a few of the things Jared Dillian does not like. Don't get me wrong, though. There's plenty he does like. He likes markets. He likes writing about markets. He likes writing short stories. He likes reading. I think you like bacon and eggs, too?
Oh, yeah, I tweeted about that the
Yeah,
other day.
that's
Yes.
on the list.
Bacon and eggs for dinner.
Okay. That voice you hear is Jared Dillian. He's the editor-publisher of the market newsletter, The Daily Dirtnap. Former Bloomberg opinion columnist. He's also the author of several books. No Worries, How to Live a Stress-Free Financial Life. His newest book, Night Moves, a collection of 16 short stories. Jared joins us here in the Bloomberg Interactive Broker Studios. We got a lot to get to with you. Where do you see the markets and the economy right now?
Well, I think commodities have bottomed. I think we had a capitulation panic bottom in August. Commodities were up about 6 to 8% in September, and they're kind of retracing now. I think the Fed committed an error in cutting 50 basis points.
Oh, we're coming back to that.
Sorry. I don't know if you already talked about it.
Oh,
but,
no. I meant I'm coming back to ask you about that.
Yeah.
Keep going.
I mean, the data has been all strong since then. And I think what's happening is the Fed confused a little bit of labor market weakness with overall economic weakness. So what happened was during the pandemic, we dumped $3 trillion into the economy, and we created this labor shortage. You couldn't get waited on in a restaurant. We had this huge labor shortage. We have worked off those excesses over the last 4 years, and now we are getting back to like a normal jobs market. The unemployment rate is 4.1%, which is 0.2% higher than it was in 2000, which was the hottest economy I've ever been in. The unemployment rate was 3.9. So they shouldn't have cut 50 basis points.
Well, let's take it back. I mean, look, I think a lot of this also benefit of hindsight. Let's go back, though, to like what we did know at that September meeting. There had been, what was it, 2-3 consecutive pretty weak jobs reports at that time. The unemployment rate had, triggered that the famous Somme recession rule, had risen up to 4.3%, down from from 3.9 in a matter of just a couple months. Like, I think like there was a bit of panic at the time. I mean, I personally was surprised by 50. I'm not going to come out here and say that I thought that was going to happen, but there were certainly plenty of people in the camp who thought that was the right move at the time.
Yeah, I think, I was going through those same internal calculations. And, I said in my newsletter, I said at the time that, if you open your eyes and ears and you look around, like the economy doesn't really seem weak. Like I can't find a parking spot in the airport. Like the airports are jammed, the restaurants are jammed. Like it doesn't really seem like a weak economy. I mean, if you want to know what a weak economy is like, my wife is here. I went out to dinner with her in March of 2009 at Spark Steakhouse, and we were the only people in the restaurant. Wow. Right? Like that's what a weak economy looks like. So if you look at these sort of intangible things, this anecdotal evidence, it didn't really. I wasn't really seeing weakness at all.
And now, of course, the jobs numbers have been revised higher. The unemployment rate has come down. Yep. And people are also wondering, was 50 a mistake? Was it a panic? Are we even going to get a pause in November? I mean, I don't think so, but what's your outlook for rates going forward?
Well, I think a good argument that could be made was that monetary policy was a little bit restrictive. Real rates were about 2.5%, 2.6%. And we should get real rates down to about 1%, which means you get Fed funds down to about 4%. I think you can make that argument that we were a little bit restrictive. But to say that we were headed into a recession, I mean, even Claudia Sahm said, she's like, I don't know, maybe this isn't like the...
I believe here on Bloomberg Radio, she said. Yeah.
Hey, Jared, we can't let you go without talking about the presidential election because this is probably the last time we're going to talk to you between now and then. You recently wrote about tariffs in your newsletter, how you're not a fan of them. You call them a disaster in the short, medium, and long term. Trump loves tariffs. Talked about that on with Bloomberg's John Micklethwaite earlier this week. You're also not a fan of Kamala Harris. You tweeted a few days ago, if you are a liberal in the financial industry, you're likely voting yourself out of a job. Help us make sense of where you stand.
All right. So with regard to the Kamala Harris comments, in 2020, she proposed a financial transactions tax. And I think people underestimate the harm that would be caused from a financial transactions tax. So what she was proposing was 20 basis points on stocks, 10 basis points on bonds, and 2 basis points on the notional value of derivatives. If you do that, trading volume will decline by 80%.
And that's when she was running for president.
That's when she was running in 2020. Yeah.
And she's pulled back on some of these policies to try, and now that she is the candidate.
And there's no chance of it happening this year, like even if she got elected, but in 2026, if the House and Senate were Democratic, it is possible. the tariffs, you cannot shield U.S. businesses from competition because it makes them, if they are not forced to compete on a global level, it makes them undisciplined and flabby. And what you are actually doing is making foreign businesses stronger because they have to compete based on price.
Given those two things that you just explained, which candidate is better in your view for the economy?
I think look, I have said that this is the most financially illiterate election in my lifetime. I think on balance, Trump is slightly better on the grounds that he is not going to raise taxes significantly, but it is a horse race.
I mean, I think, our results from our Bloomberg survey would tell you the same thing. And it's so interesting. We just had this survey of about 30 economists, and to rank, how inflation, growth, the deficit would play out over the next 4 years under either candidate. And given it was so shocking because their policies obviously couldn't be more different, yet the outlook for inflation and growth are basically the same under either one of them. Does that surprise you?
I think they are both inflation catalysts.
Yes, which is also why in the survey, people don't really see rates coming down a whole lot.
Yes. They are both, and Stan Druckenmiller has said the same thing.
Correct.
So, yeah.
Okay, we got 45 seconds on private equity with you because that's all the time we have left. You started a website called shortprivateequity.com. Looks like the Drudge Report when I go there, just headlines about private equity. Give us your take on private equity right now, why you're short.
Well, I mean, look, I have been short private equity since December of 23, and I've lost money on it. It's been a very painful trade. I think it's a bubble. I think the publicly traded corporation was a huge financial innovation back to the Dutch East India Company. Like, it makes it easy to raise capital. I think we are actually going backwards by rolling up all these businesses and keeping them private. That's the 20-second explanation of it. But
all right, well, follow Jared on X. His newsletter is the Daily Dirtnap. He's got a new book out. We didn't even get to talk to it, but we're going to have you back on. Night Moves. It's a collection of 16 short stories. We got a podcast with him about about his other book, one of his most recent, No Worries, How to Live a Stress-Free Financial Life. Jared, always good to see you. Thanks so much for joining us.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, well, we're off of session highs, but Molly, we are, wow, look at that. About 17 and a half minutes away from the close.
I am on the edge of my seat.
You should be.
Are you?
Always.
Always.
Yeah, that's what makes this fun. You never know what's going to happen. We got Aaron Kennon with us. He's co-founder and CEO over at Clear Harbor Asset Management. They've got about $1.5 billion in assets under management. Aaron, always good to check in with you. Quite a bit has changed since we last checked in with you a little over a month ago. I'm wondering how you're looking at the rate path forward and kind of what happens over these next few weeks as we get to the election, because I think that's on a lot of investors' minds.
Yeah, thanks, Tim. So, clearly the Fed moved 50, and there was a perception just a month or two ago that this was going to be a more aggressive rate cutting plan. And given the strength of growth, we just saw Atlanta GDP now today at 3.4%, seemingly strong employment market and nice productivity data of late. It appears as though the Fed is probably more poised to move in 25 basis point increments. And of course, as you think about, what does that mean for the market? I think you have the front end of the Treasury market, the yield curve already sort of pricing in a good deal of the cuts, both for this year and for next year. So we have to be a little careful about thinking that just because the Fed's going to cut rates perhaps 2 more times this year and perhaps 3-4 more times next year, that we're going to have a large move in the front end of the curve. I also think that we're most likely going to, the market's going to become a bit more volatile probably in and around the election and perhaps after the election. If the polls are indicative of how election night's going to play out, we may not know the results of the election for a week or two, and that may provide some indigestion for markets after November 5th.
I'm already dreading the days after the election, just thinking back to the 2021. I don't think we knew until that Saturday the results. So definitely brace yourself for what could be a drawn out contest there. But I wanted to tie that back to what you were just saying about the Fed. Aaron, it wasn't that long ago that people were saying like, wow, cutting in November, this meeting is it's in the same week of the election, just a day or two later, how that could be seen as political in some way. Didn't take long for that conversation to dissipate, though. I mean, how do you view that move right now? Could there be any talk that this could be misconstrued in any political way if the Fed does move at the November meeting?
Well, they're damned if they do, and they're damned if they don't.
Ain't
right?
that the truth?
You see that with Supreme Court decisions. You see that with the Fed policies. Sometimes the right praises the Supreme Court, and then, well, just recently, yesterday, the Supreme Court came out and supported an initiative that was much more in line with a view from the Democratic side. And of course, there was radio silence on praising the Supreme Court to have an election. That wasn't too helpful. So I just think that that's the reality of where we are in the moment. And I think Powell's done a reasonable job both articulating and behaving in a way that seems to be devoid of political influence, and that's a great thing.
We had this really interesting story out today about how the Powell, obviously led by the Fed led by Powell. My bad. I don't cover this for a living. I wouldn't know what that is.
You're being facetious. You do cover
very
this
facetious.
for a living.
In a day. Anyway, Powell has really got the Fed tethered to the 6-week data cycle, and that there is no otherwise medium-term forecast. Can you talk about that from an investor perspective, and how, it seems like you really just can't have this, a viewpoint that really lasts for too long, because it's just so dependent day to day, week to week on whatever the numbers are going to show and the subsequent revisions?
I mean, at a very high level, I guess the way I think about that, I don't think about it as a 6-week cycle. I just think about it maybe, hopefully, the way the Fed could be thinking about it, which is inflation was at 9.1% in mid-2022, and now it has a 3 handle, and in some cases, depending on what you look at, it has a 2 handle in terms of inflation. And normalizing rates is not accepting a view that the economy is deteriorating. It's accepting a view that price increases have normalized. And I think that that message from the Fed, if that remains in place, will continue to augur in 25 basis point cuts, probably 2 more times this year, even if we continue to see strong employment data. Like we saw today, strong retail sales data. Consumer confidence is a little weaker. We're seeing default rates rise in regard to credit cards as well as auto loans. So there's some weakness there. Of course, the commercial real estate market is still on its heels, and the Fed is aware of that. Also, the Fed's Beige Book, which is really a survey of what's happening in these different Fed districts around the country, those surveys have been suggesting that economic activity is either flatlined or actually deteriorating in the majority of those districts. So there's a real disconnect right now between some of the data, which isn't leading, like employment, it's not a leading indicator, and the Beige Book. And we'll have to see all this plays out, but I still suspect the Fed is more poised to cut than hold at least one more time.
Well, that's definitely the difficult part that I have in talking to real people about the economy, and how they say the data is painting one picture of this economy that's so great, and that employment is so strong, that spending is strong, that growth is strong. And you talk to the average American about their lived experience, and it couldn't be more different. And I think that's where you're starting to, what you're talking about here with the Beige Book, the anecdotal evidence is very different. So how are you squaring that dichotomy right now? It's got to be challenging to see like what's really the true indicator.
Yeah, well, we're looking at the macro indicators. We're looking at sentiment indicators, but of course now we're just running into earnings season. So we're actually listening to what corporate America has to say and companies around the world. I say companies around the world. For example, last night you have a German laboratory products and goods maker, sort of in the biosciences, life sciences, segment of the market, sort of indicating, okay, it seems like we have nicely moved off the bottom of a trend that had occurred in a post-COVID world. And we're starting to see real demand, and we're starting to raise our outlooks. That has huge repercussions for a lot of companies in the United States that we look at and that the market looks at. The banks have, to a great extent, reported. Certainly wasn't a disaster, particularly at the big money center banks and even the The banks have a lot of investment banking revenue, like Goldman Sachs and Morgan Stanley, where we're seeing significant underwriting revenue. Investment banking revenue growth was quite strong at both of those institutions, including Wells, including Citi, including Bank of America. And so certainly it feels like the glass is half full at the moment, but there are still incipient reasons to be quite cautious as we move into year end and beyond.
Is the biggest issue, we have 10 seconds, biggest issue between now and the end of the year, the election?
I think that's an issue that could, increase volatility, Tim. And certainly when you increase volatility, people like to reduce their exposures. Institutions like to do that. And so that's something that we're keeping our eyes on.
All right. Aaron Kennon, always love it when you join us, co-founder and CEO over at Clear Harbor Asset Management, joining us from Stamford, Connecticut. Clear Harbor Asset Management, they've got about $1.5 billion, a little over $1.5 billion in assets under management.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.